What's up, everybody? Happy Tuesday. Happy Tuesday. Happy Tuesday. Hope that you guys are having a wonderful day. I'm in my studio right now. If you're with me, you'll see that I got a little bit of a different layout, and I hope that you'll appreciate it. I've been coached and educated that this is the streamer layout to have. So I feel pretty special. I feel pretty grateful for my team for helping me get this set up. What we're going to do today is we're going to take the day to spend time answering some LLC questions that you have, some tax questions that you have, really any type of questions that you have. So if you're a business owner, an entrepreneur, or maybe you're thinking about starting a business, you probably have some tax questions around LLCs, tax questions around what deductions you qualify for. So I'd love for you to take the opportunity to utilize the chat today to share any questions that you have with me. As I continue to grow this channel and share more tax education, I look to do more of these live streams to be able to provide that extra level of touch that most people are looking for. I realize that with 300,000 subscribers, I obviously can't sit down with 300,000 people. So I'm going to do the best that I can to jump on these lives more often to be able to answer some of your guys' questions. And that leads me to some of the questions that I've already received coming from Instagram. So I'll start off with the Instagram since those are already prepared for me. And then we'll jump back over to YouTube. So in the meantime, if you guys are getting these, if you guys are listening, I'm going to answer these questions and then you guys can come up with some questions that you might have and feel free to put it into the chat. Okay. So I went on Instagram yesterday and I asked my Instagram to tell me a list of questions that they had that I can answer for them. And I just screenshotted a bunch of those questions and I have them right here. So I have screenshots after screenshots after screenshots of questions. So we're just going to take it slow. The first question comes over from Thomas. Thomas says, I want to sell clothes on Shopify. Can I sell as 1099 or should I set up an LLC? Okay. So if you're a business owner that is thinking about selling on Shopify, that's thinking about selling on Etsy, that's thinking about selling on Amazon, you are a 1099 taxpayer. You're self-employed. Your goal of being a 1099 taxpayer is to eventually earn profits from the items that you sell. If you're selling products online, you're going to pay taxes on the income, and that income can flow to you in a number of different ways. You can choose to just remain as a 1099 contractor, which means you're a sole proprietor by default, or you can choose to set up an LLC, which is what his question is. If I'm somebody that believes that I'm going to have a very successful business, at least I would start a business to become successful, and I know that there's things that could come up with being a business owner, such as dealing with unhappy customers, I might take it upon myself to just go through the extent to setting up an LLC. The main reason, the number one reason that people set up LLCs always and will forever be for liability protection. Separating the liability from your business and your personal finances is how you do risk management as you build your wealth. And when you're thinking about it, you're not doing risk management where you're protecting everything that's on the inside of the business. You're doing risk management where you're protecting the items that you have on the outside of the business. Because if you're a smart business owner, you'll start to take distributions. You'll start to pull money out of your business and protect some of that money from ever being caught up in a lawsuit that does occur inside of your business. Okay. So if I have an LLC, the LLC protects the items that I have outside of my business. Whatever is inside of the LLC could be caught in whatever type of lawsuit that arises. Okay, so great question. If you're thinking about starting Shopify, I would absolutely recommend having an LLC. Let's jump to the next one. Okay, so what are the top 3 things that people mess up when first acquiring an LLC? Love your work. The number one thing that most people, I guess, would forget to do is they forget to grab their EIN number and actually go take the EIN number to a bank. Okay. You need to open up a business bank account. And I think a lot of business owners just go through the process of paying to set up an LLC on like an online platform, but they never go into the bank and actually open up a business bank account. That is the number one mistake by all LLC owners, which leads into the number 2 mistake. All LLC owners, not all LLC owners, most LLC owners who haven't set up their bank account also don't do bookkeeping because they don't have a bank account. So how are you supposed to account for the items that you're spending your money on if you haven't taken it upon yourself to open up the bank account and then start allocating those expenses over into some type of software? right? So the number two, I would say number two thing that most people mess up when acquiring an LLC is not establishing their bank account and not having proper books and records. The number third thing is commingling expenses. That's obviously going to be the the biggest one that I feel like causes the most headaches for tax accountants is commingling expenses. There's too many times where LLC owners make mistakes of paying for items on their business card, and those items that they're paying for on their business card are actually personal items. Let me give you an example. Let's say you go out to eat, you're not doing business with anybody, but you decide to put that a meal on your business card. Come later, when you find out with your tax accountant that you weren't eating with anybody, that it's actually not a tax write-off for you to just go eat alone. Now we have to go through your bank statements and reconcile those bank transactions outside of your QuickBooks, right? So we're just creating more work for ourselves. So if you're a business owner that's thinking about trying to do business in like the most effective way possible, commingling expenses is one way that you will make such a headache for yourself come tax time. So I encourage you to just be a steward of your finances and keep personal, and business. All right, let's go to the next question. Should I create an LLC and pay myself through there or pay tax as an individual? So let's assume that this person's just a W-2 taxpayer, because this one's been coming up a lot lately. Some people are like, dude, I want to start a business. Should I take the money from my W-2 job and place it inside of an LLC and then start my business? If you're planning on self-funding your business, which means that you're taking after-tax dollars to start your business, right? The W-2 money that you may have from your day job, that money has already been taxed. So those are after-tax dollars that you're taking to go start your business. That's completely fine. But what is not fine is trying to use your W-2 income and claim it as business income and then try to take write-offs against that money. Now, it would defeat the entire purpose, right? Why would we want to be double taxed on the money that we're already taxed on as a W-2 taxpayer? The only purpose that you would be utilizing after-tax dollars to place it into a new business is if you're self-funding a business. Let's just say I was starting my own Chick-fil-A franchise. And so I saved up $1 million of W-2 income working for a really great employer. And now I'm ready to start my Chick-fil-A franchise. So I set up an LLC, move $500,000 into this LLC, and then I start buying, fryers, hamburger buns, XYZ, right? That's me self-funding my business. Eventually, what I'm going to do is I'm going to get reimbursed back for the money that I put inside of that business because I don't want to pay taxes on it. And that's what we call an accountable plan. You guys may have heard me mention the accountable plan on my channel before, like, hey, establish an accountable plan. This is how you get yourself paid back for self-funding your business. Most people just don't do that. So hopefully that helps. Hopefully that answers that question. Okay. How to file rental income to get most qualification for next mortgage. How to file my rental income to get most qualification for next mortgage. Thanks. So this question right here leads me to believe that this taxpayer is a real estate investor. So if you have rental income showing up on your tax returns, most of the time you're not paying taxes on the rental income due to the fact that you're claiming depreciation, which is the building's value. It's so big that you're not paying any taxes on the rental income. Now, if you're at a loss on your tax returns, depending on what your participation is in real estate, can also allow for the losses to offset other forms of income, W-2, 1099, stocks, crypto, you name it. And I am a very big fan of that. But if you're in a situation like this guy where you're trying to qualify for a loan, there's one thing to understand about depreciation. Depreciation is considered a soft add back to income when qualifying for a loan. And maybe this is a video, because this will be recorded, guys. Maybe this is a video that we save and we bring to our mortgage lender where we're trying to qualify for a loan. So our mortgage lender is educated, because some mortgage lenders don't know this, but your depreciation gets added back to your income in order to qualify you for a loan. Or else, how would real estate investors be able to continue to buy real estate when they're not paying any taxes, right? I have tons of real estate investors that make 6-7 figures in cash flow, passive income, but they're paying 0% income taxes, and they're constantly in a position where they're able to buy more real estate. Yes, they have some good relationships with some private lenders, but if they're using some big institutions, they're going to have to show their tax returns, aren't they? Well, those institutions are going to need to be educated about depreciation and be educated about adding depreciation back to their income in order for them to qualify for a loan. Okay, guys, what I'm doing right now for anyone who's on here, anyone who's joined me, is I'm answering some tax questions right now. I'm answering tax questions for LLC owners. I'm answering tax questions for S corporation owners. I'm answering tax questions for C corporation owners. I'm answering tax questions for W-2 taxpayers. I'm answering tax questions for day traders and everything in between. So if you have any questions, feel free to put them in right now. I'm going to finish these questions right here that I have, and then I'll jump up to answer your questions. Give me a thumbs up. Give me a fire emoji if you guys are cool with this. If you guys are cool with me answering some questions for you guys. I just want to make sure that's cool. All right, let's keep going. Can a new business vehicle expense offset W-2 income if business shows a loss? Yes. Yes, you can. If your business is at an effective loss, your loss can offset your W-2 income. Yes, it can. How to use a management company for real estate. Ooh, this one's a good one. Let's see if we can jump on the iPad. Okay. So let's just say I have a rental property and I place this rental property inside of its own LLC. I might choose to establish another LLC strictly for management services. Now, this LLC that I've set up is going to get paid from my operational business, which has my investment property in here. Cash flow comes in. Cash flow comes in from this property. Okay. Anytime money gets paid over to my management company, I'm recording a tax deduction on this LLC. The money that's over here, I'm going to pay taxes on. But if I don't want to pay taxes on the money that I moved over to the LLC, that's my management LLC, I need to create expenses. So most business owners have vehicles that they're using to manage their rental properties. They're typically managing their rental properties from a home office. They typically have children that are helping them with the property that the government allows for us to pay up to $12,550 per child without the child needing to file a tax return, right? I may have I may have my cell phone bills for both me, my wife, and my kids. That's 3 payments, right? I may choose to establish my wife a retirement account because maybe my wife is taking care of the kids now, and which is a big task for wives to do. And maybe you want to hire your wife inside of a management company to give your wife a retirement so you can contribute up to $19,500 to her 401k that you can also self-direct back into rental real estate. Guys, we can play games all day long with this management company. I know you see that, right? Hopefully you see that. I love the management company strategy. I ask this all the time when I get on the phone with people. Do you have a company that's managing your company? And they're like, what? They're like, no, we're not paying somebody. I'm like, no, are you paying yourself for managing your own operational entity? And they're like, no, I never thought of that, Carlton. I'm like, welcome to tax strategy. All right, let's keep going. 2 S-Corps, one actively managing, second, 10 to 20% of my time. How much payroll each? Okay, that's another good question. Okay, so let's say that we have 2 S corporations, right? One S Corp over here is for being a real estate agent. And then let's just say we have another S Corp over here where we have like an ice cream parlor. So we have an ice cream parlor. Okay. Now this S corporation, let's just say netted only, we'll just give them both $100,000. Okay. Give this one $100,000. Okay. What is the rule with the S corporation, guys? What is the rule with the S Corp? If you know, place it in the comments right now. If you don't know, it's okay. But if you know the rule with the S corporation, place it in the comments right now. I just want to see how many of my followers have been following along with me with this whole LLC S Corp training. Place right now in the chat if you guys know the rule. If you know the rule with the S Corp. What is the rule with the S Corp? What do you have to give yourself? What's the rule? Okay, I'm waiting for it. Come on. I just want one of you. I just want one person to have that answer, and that'd make my day. Let me know if there's one person that has it. I'm giving it a little bit of time. What is one rule that you have to make with the S corporation? Does anybody know? Oh, thank you, Karen. That is yep. Hopefully I'm saying her name right, or him, Kieran Smith. Kieran Smith, wherever you're calling from, thank you for making my day. The rule with the S Corporation is that you have to give yourself a reasonable compensation. Oh, Carlton is flowing today. Carlton's flowing today. That's right. You have to give yourself a reasonable compensation. What does that mean? That means between these two businesses, you have to pay yourself a reasonable salary. If you do not pay yourself a reasonable salary from your S Corporation, it flags an audit. Why? Because your S Corporation has an EIN number and a SIC code, which means every time you file your tax returns with the IRS gets a notification saying your net income, and they have a statistic based on other S corporations who have made the same amount of income with you, how much these other S corporation owners are giving themselves salary. And if you fall out of this reasonable compensation parameter, your tax return gets flagged for an audit. That's not Carlton's fault. It's our fault for not understanding, the taxpayer's fault. So this is why we're on here today, and we are going to talk about reasonable compensation. Now, reasonable compensation means that you're giving yourself a salary out of your S corporation. If we made $100,000, what are we giving ourselves out of that S corp? If we made $100,000 in my ice cream parlor, what are we giving ourselves out of that S corp? In my office, reasonable compensation is 30% of net income as a minimum. Okay, so 30% would mean that I'm taking $30K out of each business, right? So that's $60K in reasonable compensation that I'm paying myself. What is this $60K subject to? What is this $60K subject to? This $60,000 is subject to federal taxes. It's subject to state taxes if I've chosen to live in a state that taxes, and it's subject to self-employment tax. So being in an S-Corp does not eliminate self-employment tax. It converts it into what's called payroll tax because you're taking payroll from your S-Corps. Self-employment tax is Social Security and Medicare. And we know this. Okay? We know this. Awesome. That was a really great question. Thank you so much for joining, Luis. First time joining on here, huh? Glad to have you. Okay, can a new business vehicle expense vehicle expense offset W-2 income if the business shows a loss? Okay, we already answered that one, so that's a good one. Now we're going to move on to the next one. I'm an independent contractor and sell solar. I'm an independent contractor and sell solar. I make 7 figures a year. Any tax strategies here? Ooh, that's a good one. Come on. This is too fun for me. All right, let's go. So I'm making 7 figures in solar. Now, let's cover all the basic tax strategies that our normal, everyday public accountants are going to give us. Have you maxed out your 401k? Yeah, brother, I put $19,500 there. Okay. Are there any gifts that you can give away to charity? Hey, listen, I haven't given any gifts to charity there. Do you happen to have a mortgage or property taxes? You know, I haven't bought a house yet. I'm renting. I don't have a mortgage or property taxes. Okay, well, do you have any medical or dental expenses? Did you get any braces or operate? No medical or dental expenses. I'm a healthy 30-year-old, right? Okay, so you maxed out your 401k. You don't have a home yet. You don't have any medical or dental expenses. Guess what happens? You're taking the standard deduction, which is $12,550. Okay? Standard deduction. And right here is your 401k contribution. These two items are the only two tax plays that you have if you're a W-2 taxpayer or if you are netting $1 million and you haven't done anything to spend any additional money to reduce your tax bill. Okay? Those are the basic tax deductions that you get from TurboTax, the basic tax deductions that you would get if you were to hire somebody at H&R Block 2. They would probably recommend you taking the standard deduction and putting money into a 401k. Now, if I'm making $1 million net, put this down here. What are some strategies that I can take to reduce my overall tax bill? Okay. The first thing that I want you guys to think about is the business owner strategies. And then we'll go into the real estate strategies. Because I know you guys know that I focus a lot on real estate strategies. First thing we're going to talk about is the business owner strategies. What business owner related tax strategies could we do to bring down that 1 million? Okay. What are the things that we could do right now to bring down that 1 million? The first thing that I think about as a business owner looking for business strategies is, what if this business owner needs a new vehicle, right? I had a taxpayer who bought a really expensive vehicle. He bought a Rolls-Royce Cullinan. His Rolls-Royce Cullinan was $650,000 after paying sales tax and everything. That dropped his net income down to $350,000 because this Rolls-Royce weighs over 6,000 pounds. And if a vehicle weighs over 6,000 pounds, we can leverage code section 179 plus bonus depreciation, right? That's one thing we could do. Now, most business owners aren't enthusiastic about dishing out money for a $650,000 car. I only talk to maybe about 4 or 5 of those clients a year. They're like, oh yeah, let's do it. So most of them are not going to be enthusiastic about getting into a Cullinan. Okay. So then they're like, dude, what else can I do? Well, we can go down the route of being philanthropic, right? We can set up possibly a PFF, a private family foundation, and we can roll over 30% of your net income into the PFF and receive a tax deduction for it. And now I have this new entity structure in play for you. That's one thing that I could do, right? But maybe you're not wanting to be philanthropic. Maybe you want to continue to be someone that reinvests money back into your business and you just don't want to pay Uncle Sam. Well, if you're single and making $1 million net income, I know that I can help you buy an investment property and run this investment property as a short-term rental, STR. Now, the government states that if you're renting out a short-term property for 7 days or less per tenant, it's not considered a rental property under code section 469. So then I can do a cost segregation study on this property right here and accelerate depreciation. All I need to do is create enough losses now with rental properties on the tax return to offset your 1 million. But I need to make sure that you're materially participating in your investment property. Okay? Because this part right here is what allows us to be able to offset this income right here. In order for our passive losses to offset our non-passive income, we need to materially participate in our investments, right? So if I'm meeting this kid who is making $1 million in solar, because I meet young entrepreneurs every day, guys. It's like, oof, it's every day. So if I'm meeting this kid that's making $1 million, I'm going to tell him, hey, are you open to buying rental real estate? Most of the time, when I say most of the time, like 95% of the time, I'm talking to people that want real estate. They're like, dude, I wouldn't mind having an investment portfolio. Like, yeah, Robert Kiyosaki, like all these other people that I've studied, like they all have real estate. That sounds like a great idea. And it comes with tax benefits. Can you just explain it to me? And I start talking to them about the passive activity loss rules. And I said, okay, well, there's passive losses that you can use to offset your active forms of income if you materially participate in your short term. If you don't have a short term, you have a long term, then you're going to need to qualify as a real estate professional. It's a huge uphill battle to qualify as a real estate professional. So most business owners are more open to doing short-term real estate as opposed to doing long-term rentals because of the time requirements. 100 hours, 750 hours, plus you're spending half of your time in real estate more than any other thing. Like that's so much time being a real estate investor. I'd rather just spend 100 hours managing one rental property. Like 100 hours, what is that? 30 minutes a week? Like that's crazy, right? So if I can manage one property and accelerate depreciation on that one property or a couple of properties, I can create enough rental losses on the tax return that become non-passive losses to offset my non-passive income, my W-2, my 1099, my stock, my real estate income. If I'm making $1 million net revenue, I can offset 100% of that $1 million with rental losses. I have taxpayers that do this every single year. I golf with my clients who pay 0% in taxes. And believe you me, they would not want me out there on that golf course with them if I wasn't saving them money and helping educate them, right? They would spend their time with other people, but they choose to bring me out on this golf course and let me play for free because I've helped them live a tax-free lifestyle. I have taxpayers here in California that are not paying any taxes because they just listened to this strategy right here. And so I am a very, very, very big advocate for utilizing the government's tax system. The biggest tax deduction the government gave us is depreciation. How you choose to wield that sword is completely up to you as a taxpayer. All right. I'm a Forex trader and I have no idea what to do regarding writing off my losses. Oh my goodness, man. I really would love for you to watch that video I did for day traders and Forex traders because I talked about the mark-to-market election that you can make as a day trader or a Forex trader where you can claim 100% of your losses. And that right there honestly helps out a lot of day traders. The problem is that we're converting the type of income you're receiving and what it's going to be subject to, the taxes it's going to be subject to. So if you are confused around what you should do with your losses as a day trader, it's one of those professions that you do need to sit down and talk with the tax professional. It's kind of hard to shoot from the hip blindly and to come up with a good solution for yourself without talking to somebody. I'm late. Here's the next question. I'm late on filing taxes for my business. What are the consequences? Well, if you're late on filing your taxes, you're going to pay penalties plus late fees, right? So you have a penalty for filing late. So there's a penalty for filing late for each month that you're late. And then there's a percentage based on the tax that you paid or that you were supposed to pay that you'll pay as a late fee. So yeah, guys, always just choose to fill out the extension form. It doesn't make any sense to not do that. If I was to have an LLC by the name of Bills Inc. selling products online, can you buy real estate? Bills Inc. selling products online. Can you buy real estate? I mean, technically you can buy real estate underneath any entity structure you establish. If I establish, Toys R Us 2.0 LLC, yeah, my name might sound like I'm starting a kid's store, but I can also hold real estate inside of that entity. So yes. Carlton, I'm starting a pressure washing company. What's your thoughts on how to structure? My thoughts is that you'll probably start out as a LLC, possibly a single member LLC. I'm not a big fan of them, but you'll probably will start out as a single member LLC or a multi-member LLC if you have a family member that will choose to be the 1% owner with you underneath the business, just so we can fly under the radar with the IRS. I prefer to have multi-member LLCs partnerships as opposed to single member LLCs. Single member LLCs are 33% more audited than partnership LLCs. When you swallow that enough times, you're like, dude, that's crazy. Why would I want to go through a system that's like subjected me to be audited, possibly 33% more likely to be audited? That's crazy, right? So take that into consideration. You're going to start out most likely as an LLC, and then you will transition over to an S-Corp right when your business has netted around $45,000 to $50,000 in net business revenue. All right, here we go. Why should I open an account with a big bank and not a small credit union? Why should I open an account with a big bank and not a small credit union? I believe in opening business bank accounts with big banks and also going to small credit unions to establish a relationship with a small credit union if you're looking to get funding. The reason why I say to go to big banks is because if you go to big banks and you start doing high levels of transaction, like money is flowing into your bank account, you can get with big banks, some really good big banks like Chase have 0% interest credit cards, and you can get a really big limits. I'm talking $200,000, $300,000 of 0% interest credit for like an entire year. Like, what if I just gave you $250,000 and told me that you didn't have to pay me any interest on that for 12 months? You're gonna be like, yeah, I'm gonna go start a business, get into real estate, start a Turo business, $179 a vehicle on Turo, make money and never pay taxes and then pay off the debt. There's just so many things you can do with that, right? So that's something to take into consideration. Would someone be able to write off a vehicle doing Uber or Lyft? Yeah, of course. I mean, obviously that's your main means to making money. I don't have a lot of Uber drivers that are taking actual over mileage. So mileage just increased to 62 and a half cents. Um, Mileage is up by 4 cents this year. Okay. So mileage is up by 4 cents this year. Oh, Jesus. What type of write-offs can you pull up for an OnlyFans LLC? So if you're doing OnlyFans, that means you're in the entertainment space. So let's just take this seriously. If you're in the entertainment space, you're a business owner just like any other person. So are you tracking the expenses that are hitting your bank account and the income that's hitting your bank account? Do you have some type of QuickBooks or accounting program that you're allocating your expenses? Because at the end of the day, you're going to pay taxes just like every single other person. Okay. Whether you're choosing to do YouTube, choosing to do OnlyFans, choosing to do Patreon, right? You're an entertainer. Okay. So the expenses that you have that you get to write off have to be ordinary necessary to your business. And I'm sure you can get pretty creative there. All right. Can I pay for education schooling through my LLC if it pertains to said LLC and gets breaks or write-offs? So if you're spending money on training, and education for your business, absolutely you can write those items off. There's tons of people who buy courses. Hell, if you guys spend money on Tax Alchemy, or if you guys join the Tax-Free Wealth challenge that I'm launching. By the way, click on the link below. The Tax-Free Wealth Challenge is live, and I believe we only have like 20 VIP tickets left. So if you guys like love the way I explain tax strategies, I'm going to do a whole 5-day training of advanced tax strategies. And if you love the short-term rental strategy, I'm going to completely go over the short-term rental strategy. So I just wanted to quickly plug myself right there. But that's extremely important, guys. I'm not going to not plug that right now. The Tax-Free Wealth Challenge I've been working on for the last 3 months. Okay. So if you're somebody that really enjoys my YouTube channel, take it upon yourself to do yourself a favor and just join the challenge. What we're going to do over those 5 days is we're going to go through some of the most advanced tax strategies that I have. And then I'm going to come into a VIP section with you, and I'm going to teach you how to implement them. So people who are showing up to the VIP will actually get me helping them implement those tax strategies if that's something that you care about. If you're just general admission, you're just going to get access to the Facebook group and you'll be able to watch all the live sessions. But you won't be able to be a VIP where I get to talk to you every single day. So it won't be as intimate. All right, guys. So tax planning allows for you to pay off or to write off your education. It allows for you to write off your training. But if you're trying to write off schooling, you're not able to write off schooling. So if I took a loan out from the bank, I'm able to write off this the interest on the loan, and the government only allows me to write off about $1,500 on my student loan interest. But if I take a student loan out to like better educate myself to go into a W-2 job, such as becoming a surgeon, doctor, attorney, you name it, I'm not going to be able to write off that education. Okay. So this is why a lot of taxpayers who are self-employed should really take it upon themselves to start early with their children. We had a taxpayer that came up and asked a question earlier about, Carlton, how do you use management companies? And I was explaining that management companies are a great way for you to create additional tax deductions. But this is also a great way for you to place your children on payroll and take it a step further and create a Roth IRA for your children, right? Because you can contribute $6,000 right now into your child's Roth IRA, especially with where the market's at right now. That'd be a really great thing to do. That money grows, and by the time they're 18, it's like guaranteed to have like over $1 million in it. So definitely something to take into consideration. As an employee, is it possible to pay taxes at the end of the year instead of getting a tax return? Ooh, that's a good question. So 2 years ago, the government updated the W-4 form, especially here in California. So it might be different in other states. And the reason why they did this was to prevent W-2 taxpayers from doing exactly what the W-4 form allows you to do. Adjust your withholdings. If you're adjusting your withholdings, you're pretty much letting the government know, hey, I'd rather take home more money right now and I'll pay you whatever tax I owe you later. That's kind of like being a business owner, right? Business owners make money first, spend money second, pay Uncle Sam third. Employees make money first, pay Uncle Sam second, and spend whatever's left over that comes on their paycheck. So there's a different path to how you earn your money when you're self-employed versus when you're an employee. And if you're an employee that adjusts your withholdings, you could be in a situation come April 15th where you've spent the money that you adjusted your withholdings for on other items that didn't create tax deductions for you, such as liabilities, right? If you're adjusting your withholdings, hopefully you're adjusting your withholdings for a very important purpose, like getting into real estate and playing the whole game that I was talking about earlier. So that leads me to my next item. I do have taxpayers that adjust their withholdings because of the games that we played in tax planning, where we will literally buy real estate, accelerate depreciation. We'll know exactly how much losses that we have on the tax return. And then I'll tell the taxpayer, hey, here's how much you're not going to pay in taxes. So if you want, you can go adjust your withholdings by that much. And here's how much you'll start receiving in every single paycheck, knowing we're not going to owe taxes on the other end, right? That is like the best place to be in because you're fully immersed in the game. Okay. Like you're fully immersed in the game. You know, how Facebook came out with this whole metaverse thing and there's like these Oculus glasses. And when you put those glasses on, I don't know if you ever put those on, like you're fully immersed in that system inside those goggles. You can't see the ground. Okay. You can't see anything around you. You're inside there now, right? That's what it takes when it comes to becoming like 100% tax free. You have to fully submerge yourself into this game. So just, gosh, I hope you guys appreciate that. Okay. So yes, it's extremely possible to do that. What type of write-offs? Okay. So we talked about the OnlyFans person. Can I write off my tools even though they weren't purchased with a business credit card? Absolutely. Yes, you can. You can write off your tools if they were purchased in a personal account and then allocate that expense over to business. Should you do that? Absolutely not. No, because now you're breaking the corporate veil. You're breaking your LLC's protection. That's the whole reason you establish an LLC, is to have protection from your business and yourself, right? But if you start paying for things in your personal bank accounts, you're breaking the veil that the LLC has. And so just extremely important that you guys are protecting yourselves. Now, I've gone through all of the Instagram questions. I'm going to jump up and try with a T, tackle as many questions as I can that you guys put in here. All right. Thank you guys so much for signing up for the 5-day challenge too. By the way, just for those who are hopping on, and I'm going to go through these questions with you guys, but just for those who are hopping on right now, I'm launching my first ever 5-day challenge. And I called it the Tax-Free Wealth Challenge for a reason. You guys know who Robert Kiyosaki is. Maybe you guys know who Robert Kiyosaki's tax accountant, Tom Wheelwright, is, right? When I read that book, Rich Dad, Poor Dad, and Tax-Free Wealth, it changed everything for me. And it made me go so hard into getting my tax license and becoming the person that I am today, hopefully that you guys are proud of. But that information stuck with me. It was about how to go from the left side of the quadrant to get over to the right side of the quadrant, to go from trading your time for money to getting assets that help you build cash flow and reduce your taxes at the same time. And dude, I literally dedicated my life to figuring that whole thing out. Like, how can I get assets? How can I no longer trade my time for money? And once those doors started opening up for me, was when it really became fun, because then you got to a place where you can start educating other people, right? That's why the YouTube channel is doing really well. My goal is to not only teach tax education, but teach how to build wealth. And I think I have created a lot of millionaires recently simply through a shortcut. Really, the shortcut is by leveraging the tax code. That is the shortcut to becoming a millionaire. If you can avoid the biggest expense you have, if you can avoid that, you can get to becoming a millionaire faster. And so if that's something that you guys would like to do, or something that you are open to doing, join the challenge. Join as a VIP so I can coach you and position myself to be your tax strategist. Okay, let's jump into some of these questions. Hi there. This one's coming in from JJ Pop 619. Hi there. Do you prepare taxes for traders? Absolutely. We have day traders. We have 5-figure traders, 6-figure traders, 7-figure traders. We have 2 8-figure day traders. That's why I was like, dang, I probably, if I was 19, I would have figured out the whole day trading thing. I just bought my first Airbnb. Curious if I should LLC and if it will affect refinance. No, depending on how you retitle the LLC, right? I would look at doing a grantor deed transfer. A grantor deed transfer. We'll talk about that in the Tax Alchemy program if you're not already in there. Over the quitclaim deed, I would do a grantor deed transfer and retitle that property in the name of an LLC. I would also look at establishing an LLC in a place that doesn't require your name and information to be online, or at least have your parent LLC in a place that doesn't require your name and information to be online, such as like Wyoming and Delaware. Okay. Hi, Carlton. I work a job and have a snake breeding business. I filed as a sole prop last year. Would it be best to stay sole prop until earning enough to go to S-Corp? I think so. I think so. Because if you set up an LLC, you're going to have to pay tax preparation fees for an LLC, but it might make more sense for you to have the LLC to avoid any type of legalities that could come up with being a business that's selling rare animals. If I bought a snake from you, something tells me that if I don't like that snake or if it bites me, that I might be able to sue you. Something just tells me I could do that. I might be able to have some laws in California that will protect me from buying that pet from you. And if you're just a sole proprietor, that means you're just using your social security number and everything that's attached to your social security number. Your personal bank accounts, maybe your kids' bank accounts are all, exposed now. So, I have a hard time telling you not to set up an LLC, brother. I would just pay the money and set up an LLC if I were you. Okay, Economic Ninja, I appreciate it. Aussie Mindset, should my business bank account list my personal address if I have the business entity established in another state with an agent? I would never want my personal address associated with my business. That was my my very first LLC that I set up. I had my personal bank account or personal address associated with that account. And I started getting all this mail coming in from all these random institutions asking me if I wanted loans and lending. And I was like, what is going on? How do these people know I live here? I was like, oh, snap. It's because my business bank account's online. I was like, if these companies can find out I just started an LLC and send me mail within a week later, someone else that I'm going to transact with will be able to do the same thing if something were to occur. So I was like, I got to get my address offline. I immediately went and bought a virtual address. You can go to Regus.com, R-E-G-U-S. How does Carlton spell it? Regus.com. To get a virtual address, you'll pay a monthly fee for it. And that virtual address will be attached to a PO box in order for you to be able to receive mail there instead of having your information online. Hopefully that saves you. All right, let's keep going. My wife and I started an LLC together this year. Our W-2 income is over $150,000 a year. Our LLC makes $10,000 a year. Should we switch to an S corporation? My wife and I started an LLC together this year. Our W-2 income is over $150,000, but our LLC makes $10,000. I mean, you're a concept, right? So if your LLC has made 10 grand, you're still proving that that you can run a business. Okay. That's part of the reason why you don't switch to an S-Corp. You don't switch to an S-Corp until you're profitable at 50K. That's shown me that you can really run a business. That's shown me that you justify taking payroll. That shows me that you justify paying yourself. But for someone who just has 10,000 left over in the business, I wouldn't even pull any money out of that business. So why would I switch to an S-Corp, right? There's no benefit of me becoming a W-2 employee with just $10,000 in that business. So I would remain the same, Christian. It's easy to offset $10,000. So I probably wouldn't even be stressed out about my taxes either if I only had 10K. That's so easy to offset 10K. All right, next question. I just applied to be an LLC and will get my EIN number. Should I wait until all of this is completed? Or can I start now? I wasn't sure whether the LLC start date is important for start date of my business. No. Your business can start with or without the LLC. So let's just say, and this is a really important aspect to cover really quick. Let's say Carlton had the idea of starting, what's a good business for me to start? I'm not going to do the candle business because I know you guys are going to get me on that one. All right, I'm going to do a t-shirt business. Let's say I had the idea of starting a t-shirt business. So I created the website in January, created the YouTube channel, created like an Instagram page for it, connected with a bunch of suppliers on Upwork and stuff like that. Like, to me, the business has started, but then I jump on YouTube later and I find out, shoot, Carlton's telling me I should have an LLC to get liability protection because something could always happen with a business. And then shoot, Carlton's telling me that I should probably switch over to an S-Corp to save money on taxes with my business. So you start going through your head like, oh my gosh, I'm going to need to do all these different things. Well, your business has already started to you, right? Just because you set up an LLC maybe in March, April, or May doesn't mean that your business is not active. All the income and expenses that you earn can be allocated into the LLC. And if you decide to switch over to an S-Corp before the end of the year, all of the income and expenses that you earn from January can be allocated into that S-Corporation. So you're subject to the tax savings that you would receive by being an S-Corporation. So that's a big one. Hopefully that makes sense. Hi, Carlton. I'm starting a trucking company, wondering what entity I should go with. Disregarded entity, S or C. I'll be 1099, and I estimate I'll make over 100K for the year. So I'm going to reiterate this whole trucking situation. So, and maybe you guys can help me because if there's truckers on here, you guys, I know you guys talk. So 2 years ago, I got blown up. I kid you not. Every day there was truckers calling into our office. Hey, we're trying to work with your company. Hey, we're trying to work with your company. Is it very popular for truckers to refer people on those radios? Like, I really feel like it is because my office works with so many truck drivers, and I only worked with one at first myself. And then ever since that one truck driver, it's just been like 150 truck drivers. I don't know what it was. Anyways, we work with a lot of truck drivers. Most of the truck drivers we work with start out as LLCs. Then they transition over in S corporations. Why, you may ask, is because of self-employment tax. They want to get themselves on a place where they're not paying as high self-employment tax and they're taking payroll. But I do have one or two S corporation owners that have a C corporation management company that manages their S corp. Okay. So they pay money from the S corp to the C corporation, and the C corp operates as a management company. Okay. One thing to know about the C corp is the C corp is a non-flow through entity. Okay. So that money gets trapped up there, and then they offset that money, and whatever's not offset is subject to a 21% federal tax rate. Right. Awesome. Let's keep going. If I finance a car, can I roll it over to my LLC and use my disability to pay the car off? If I finance a car, can I roll it over to my LLC and use my disability to pay the car off? I'm not a big fan of paying cars off. If you're a business owner, I'm not a big fan of paying things off. I'm not a big fan of paying things off. Okay. I need you to have debt. If you're going to be a business owner or a real estate investor, I need you to have debt. Debt works against taxes. Okay. If you are somebody that comes to me and you just told me, Carlton, I just paid off my car. I just spent $12,000 and paid off my car. I'm like, dang, I can't use that as a tax deduction the following year now because you already paid off the car, right? There's no car payments. There's no payments anymore. Your car insurance just got cut in half. So now you just increase your taxes, right? And your money is not working for you. The $12,000 that you just put towards a car, towards a depreciating asset, could be put into the S&P 500, growing at an 8% to 12% return over the next 10 years for you. Or you could just save that money and buy a rental property and play the whole real estate game with me, right? So I'm not a big fan of paying off cars. Now, one thing to know is if you do pay off a car, cars are still written off over the course of 5 years. So if Carlton goes and buys a Subaru and it does not weigh over 6,000 pounds and I pay for the entire car cash, I cannot write off the entire car because I paid for it cash. The government only allows for me to write off a percentage over the course of 5 years. So if it's 50 grand, a $50,000 car, that's 10K I only get to write off, even though I spent 50. So now it's like, damn, what could I have done with that additional 40K, right? I could have reinvested it. So this is, guys, it's so important to understand good debt versus bad debt. Ooh, please join the challenge if you haven't already. Please take the time to click the link right below. It should be like right here, over here, maybe. Yeah, click the link. Awesome. All right. Hey, Carlton, I'm in Texas and I wanted to know if I had a record if I had a record company and production company, should I use a series LLC with the record company as the parent company, or should I create two separate LLCs? Ooh, good question. I'm going to reiterate this question so everyone can hear it. Hey, Carlton, I'm in Texas and wanted to know if I had a record company and a production company, should I use a series LLC with the record company as the parent company, or should I create two separate LLCs? I would use a series LLC in this situation. Why? Because in this situation, my record company and my production company are going to have a relationship with each other. If I'm putting out records, I'm going to need a production company to help me produce the records, right? Rather than setting up two completely separate LLCs, right? And have two separate filings and pay tax preparation services to file those two entities separate, I can have a series LLC that's all done on one tax return, creating far less headaches for my tax accountant and saving myself time from a bookkeeping perspective. So yes, absolutely, you can have a series LLC. And these are the type of situations in which we set up series LLCs as opposed to multiple LLCs. Okay, Johnny Crypto. Hello, Carlton. Will I get a refund for writing off a vehicle for my business even though I'm just starting out? I've made a small profit, but I was paying for it out of pocket. If you're at a loss on your tax returns, the loss is going to offset whatever taxable income that you have, and that comes back to you in the form of a federal tax refund. You also may have an NOL carryover though. So if you have a loss on your business, your loss may carry forward to offset new business income. Is it possible to write off an entire house if you use 100% of it for business? That's what a rental property is, right? Or that's what you renting out a house is. Rental property, gosh, same thing. But let's just say you're renting out a house for something else, right? Let's just say I am a content creator and I specifically bought this house right here and have completely turned it into a content house. It's 3 bedrooms. All 3 bedrooms are different scenes. This one is like an ocean theme where there's like water on the walls and waterfalls in this bedroom. The other bedroom's like grass theme. There's like fake grass on the walls. And then I have another bedroom. I'm getting creative here, guys. But you could see the house, and I'm using 100% of that house for being a creative. Every room has already been set up. I can write off the entire house, the rent, whatever I'm spending, the mortgage on my taxes, right? That's no different than you leasing out a physical warehouse space, right? So yes, you can. If you choose to rent out the property to somebody else, you're now a landlord, which kicks in depreciation. You get to leverage depreciation on your tax returns, just like we talked about. So great question, Johnny. Is it possible to write off an entire house? Okay, we already answered that one. How do payments work with that structure? Okay, so somebody's asking a repeat question. LLC versus S-Corp, when to pick one versus the other. LLC versus S-Corp comes down to net income, right? I think if you jump on my YouTube channel and go over the video, when to switch from an LLC to an S corporation, that's going to open your eyes, man. You're going to be like, holy crap. Salary. Thank you guys so much. I'm just now reading all those answers. So thank you guys for answering reasonable compensation. It just shows you guys' attentiveness on the videos. Many questions asked here and readily explained in Carlton's past videos, FYI. I appreciate you. Yep. Okay, great. I'm on LTD and don't have to report investment income. My LTD is untaxed and treated as third-party sick pay. I would like a short-term rental. How would I set up my tax strategy? Same way. Establish an LLC, place the property inside the LLC, accelerate depreciation, sit back and chill, and get ready for fantasy football season. What if expenses are more than profit? Will you receive a refund for the difference? Yeah. So guys, this is where a lot of W-2 taxpayers actually get themselves in trouble. W-2 taxpayers are like, okay, I'm starting to make more money. I should probably set up a business and like take some additional deductions so I can reduce my taxes on my W-2. And they do this. They set up an additional business. They tell their CPA, I'm starting a business. They report a loss one year. The loss offsets their W-2 income. Their refund skyrockets, goes from like $5,000 to $11,000. They're stoked. The following year, they think they're going to do the same thing again, except a little bit more aggressive. The CPA, who is not trying to actually protect the client, allows them to do this again. Boom, they have 2 years of showing a loss on their business. The 3rd year, they get a letter from the IRS. Oh, snap, what's going on? Oh, well, the IRS wants to know if your business is a hobby or not. Can you meet with them and talk about why you spent the money on these expenses? And then you end up telling the IRS, oh yeah, well, I'm trying to get this t-shirt business off the ground and I've just been having a hard time. And, I haven't really found the right person to work with me on the colors and design. And they're like, listen, you're spending money on cell phone, you're spending money on rent, home office, laptops, computers. Everyone else has these items. That's a W-2 taxpayer, right? You've just chosen to write them off and you haven't made any money. You're showing no economic advancement. Hobby. Disallowed on your tax return for last year, disallowed on the tax return for 2 years ago. By the way, owe me the tax. Give me that money plus interest and penalties. Woo! I've had so many taxpayers when I first started out early on that were trying to get one on your boy Carlton, pull a fast one on me. They would schedule meetings with me and be like, yeah, man. So like, you see how much I'm making, right? So what should we do? Like, what type of business should we start? And I'm like, what do you mean? What type of business should we start? What type of business should you start? And they're like, no. Like, well, what are we going to do to work the numbers? And I'm like, I don't work numbers. I don't do that. Like, whatever income and expenses you had for the year is going into the little software here and it spits back out a tax return. If you do tax planning with me, that means you already are self-employed and you already are an investor, or else it doesn't make sense to do tax planning unless you're somebody that's trying to become an investor, right? So I ran into multiple guys, dude, like people who were like, dude, but we're buddies, Carl, like what? And I'm like, dude, I'm not going to sit up here and have you file a tax return with a random Schedule C coaching business at a loss because you want to reduce your W-2 taxes because you haven't figured out this entire game that I preach. Okay. Do not shortcut the game. You will get burned. It is not fun for anybody. It's not fun for tax accountants. It's not fun for you, right? It's not even fun for the IRS, really. Like, it's more work for them. So how about we just follow the game that's been laid out? There's a book of rules. And once you learn the rules, you can just drop yourself on the map, right? And then you just start seeing all these other people that are in the game. Hey, what's up, dude? Hey, I'm in the game. It's literally like being in Toon World. Like everybody's there now, all trying to get to one goal, which is grow tax-free wealth the quickest way possible and get their time back. Okay. But if you're like the person that's constantly like looking under the rug, like, dude, how can I find the cheat codes? And like, how do I get out of this game? Dude, I'm sorry. It's just not going to ever happen for you. It's not. Okay. Shanae, do you offer mentorship? I am actually going to be opening up my mentorship to some of the VIP members who are joining the Tax-Free Wealth Challenge. So the Tax-Free Wealth Challenge starts on Monday and it's going to go until July 1st. So it's going to go from Monday until Friday, 5 days of coaching at 4 p.m. Pacific Standard Time. So you hop on Zoom with me and we're going to jump into the iPad and I'm going to go very, very hard on some tax strategies, but we're going to really understand these strategies this time. Once we go over the strategies, we're going to hop into a separate section where we're actually going to implement the strategies. So it'd be really cool if you're there. If you're not there, you won't be able to get the coaching calls that I have that are going to be recorded for you after each session. You won't be get added to the Facebook group. You won't be added to the Telegram group where we can instant message each other so I can answer some of your questions. So if you're open to that, I would love for you to join the Tax Free Wealth Challenge. Even if you're not available during that time, you should definitely join the challenge because you get access to the recordings. And I'm going to be choosing 20 people from the VIP group for mentorship. We already have over 150 people. So I would absolutely make sure that you join the challenge and show up. Yes, that's correct, guys. I do have some clients that are doing all types of creative stuff. We have rappers, ball players, OnlyFans, you name it. Okay. Musicians. I have been doing business with my husband since March. I am the owner. My husband does the work. He's the handyman and he pays taxes on his W-2 for his full-time job. This will be added to his taxes as a Schedule C, correct? I have kept my bookkeeping 100% in 4 different ways. I've set aside 30% of our income for every payment we've received. I take out owner's withdrawals from our bank account when we need it and keep enough cash to make payments to needed areas. We do not have a CPA. I want to make sure we're on the right track. You have walked us through our bookkeeping, our write-offs, our everything. We have inquired about you to help us, but this has been difficult financially. We want someone who we trust and help us with strategies to make wise choices and decision on our taxes. Okay. What? Wise choices. Okay. Would you be willing to help us even being such a small business? This works with not. Okay. God. Okay. I get the gist of this question. So first things first is I'm very proud of you for separating your finances. You clearly are a steward of your finances. You're taking it a step further by saving 30% of every single paycheck that you're receiving. Even though you may not be taxed at a 30% rate, you're doing that. So that's just showing how cautious you are, right? The next step for you is really doing tax planning because you're doing things kind of blind right now. You're like, maybe 30% is what I should say. Maybe 30% is what I not should say. Maybe my husband is going to have a Schedule C. Maybe my husband should not have a Schedule C. Maybe my husband should be underneath my business. Maybe he shouldn't be underneath my business. These are questions that you have. So what we do is we start figuring out, okay, what is the actual end goal that you're trying to get to with your business, right? Like, do you want your time back? Do you want to eventually be the person in the business that's just like managing everything and you're chilling? Or do you actually want to be the person that's doing a lot of the consulting and like literally you're the business. You're the reason it runs. So we have to think about the end goal first, right? Are we planning on eventually selling the business? Is it a franchise? Is there going to be an exit? Once we know what the end goal is, then we start backing into what we need to do. Okay, now we know the end goal. Okay, let's back into what the entity structure needs to be for a business like this. Then we back into what is the husband's role in the business? What's the husband's role in the family, right? How busy is he? What is he capable of doing? Then we back into how are you getting compensated? Do we have any relatives, children who are a part of this business, right? How much money comes in on a regular basis? Are you already thinking about retirement or you're not even focused on that right now? Because most business owners who are just getting started, they're not even thinking about retirement. Like, what? I'm going to lock up money into a retirement account? Like, that's crazy, right? They're not even thinking about that, right? So these are just things that we have to ask first before we start saying, oh yeah, place him underneath the business and give him payroll and X, Y, and Z. All right. So hopefully that helps. Oh man, Joel is on here. Man, Joel, big fan of you, man. Look forward to getting reconnected. I've recently started a new business. I'm looking to purchase 5 to 10 vehicles over 6,000 pounds using the IRS 179. When would be the best time to purchase the trucks? The best way to go about it? I mean, whenever you want to get started in your business is when you want to get started. Something tells me that you're buying these vehicles to rent them back out. Possibly. Let's just say you are starting a Turo business. You can buy 5, 6, 10 vehicles all underneath one LLC and Turo out all 5, 6, 10 vehicles and 179 plus bonus depreciate all 5, 6, 10 vehicles and write off the entire purchase price, even though you financed all of them, right? And then the money that you earned from Turo, you can completely offset it. Let's go over this one on an example, okay? All right. So let's say I got a 0% interest credit card. That gave me $100,000 for 12 months, right? So I take this $100,000 and I put a down payment on this G-Wagon. This is my G-Wagon right here. G-Wag. That's my G-Wag right there. And let's just say they were like, hey, Carlton, your down payment is going to be $20K in order to buy the car. So I'm financing it. Okay, cool. Well, my G-Wagon might be worth $150,000 on paper and I financed it. Let's say now I placed the G-Wagon on Turo, and on Turo in 1 year, I earn myself $120,000. Okay. I take $20K, pay back my credit card off, the $20,000 that I took out of my credit card. I pay that off, and then I'm left over with $100K. My $150,000 vehicle purchase is going to put me at a negative $50,000 loss. Whoops. Sorry. That's going to be a negative $70,000 loss because you still have the 120 that was made. Still taxable income. I'll still be at a negative $70,000 loss. Okay. So this is exactly why most business owners go after setting up vehicles that weigh over 6,000 pounds, because if you buy a vehicle that weighs over 6,000 pounds, you can make money. You can make money and use the money that you have from the vehicle to offset and put yourself at a loss. Okay. So I'd be at a $50,000 loss in this situation. Make sense? So this person right here wouldn't pay any taxes on the money that they earned from doing Turo, and they'd be able to pay off the 0% interest credit card. That's a pretty good gig. That's a pretty good gig. Hi, Carlton. Me and my wife want to buy a few rental properties and have great credit score, have great credit score in cash. My problem is I can't find a lender that will lend 40K or less. They want me to buy 50K or in a house loan at a higher rate. So this is a relationship problem. So it sounds to me like you just need to establish a better relationship with a lender who understands what you're trying to do. Most of my customers who go into real estate don't have really great relationships with lenders early on. And then after they start doing a couple of transactions, the lenders actually become their partners in the real estate deals, right? So this is just a matter of you finding that right person. Who is going to be your partner? Who understands what you're trying to accomplish? How can you establish a good relationship with a lender that understands what your goals are so you guys can both get what you're looking for? Are you going to do this challenge again? This might be my only challenge, guys, this year. So the tax-free wealth challenge might be the only challenge that I choose to run all year. So if you guys are open to joining me for my first ever challenge, I'd love to have you there. Can I start an Amazon FBA selling account from a country that isn't eligible if a friend signs up for me, but I create an LLC in the United States and do all the necessary tax requirements? Clearly, that doesn't sound like something that Amazon would want you doing. So I would definitely look on Amazon's website and read the rules on that. Your friend might be able to set it up, but the income that you would receive now, how are you going to report that income? So if you get that income, is that going to be consulting income? Are you consulting your friend on this business? So your friend's the one who's establishing it and he's paying a consulting fee to you for him having that business. Oh, you can get creative there. All right. So someone just asked, Kaylin just asked, Carlton, this is very powerful. How often are you YouTube live? Guys, so I'll be honest with you. I just got YouTube live set up. So this will actually start happening probably every week. I just think it's very important for me to increase the amount of engagement I'm having with my YouTube audience. Instagram's pretty easy because I could just post like a flyer and say, hey, ask me a bunch of questions. I'm able to respond pretty quickly. But YouTube is where my biggest audience is. So I want to be here for you guys. Hey, Carlton, I'm in online business. Does it make tax sense to start my LLC with my wife as a partner, even if she's not involved in the business? If you were to work with me, I would advise to do so because I know that if I file tax returns with a partnership, that my audit risk is reduced as opposed to filing tax returns as a single member LLC. So I would always rather file as a partnership if I'm in a position to do so. Hey, Carlton, this is my first time attending your call. I'm a day trader and I profit $100,000 a month. What info do you have for day trader filing taxes? Yeah, guys, listen, I work with day traders who are doing 200K a month, 500K a month, 50,000 a month, 20,000 a month. It all comes down to what your goals are, King. And that's his name is King. If you're trying to buy a rental property, great. I can help you offset 100% of your day trading income by just participating in rental real estate. If you're not trying to go down that route, we're looking at business owner strategies to reduce your taxable income. Maybe we set up a management company. Maybe we do the Augusta rule. Maybe I leverage a bunch of different strategies that just drives down that amount of revenue that you're receiving. But ultimately, we have to figure out what your goals are because maybe you're trying to qualify for something. All right. There's just so many questions I'm trying to figure out which one I want to answer. Can my S-Corp, which is me and my physician services, pay for and write off domestic expenses such as nanny, childcare, catering, dinners, etc., etc.? So there are childcare expenses that you get to deduct on your taxes. They're limited based on your income. There are nanny services that you would even be able to deduct, but it's also based on your income. Catering dinners for your business is tax deductible. But you would need to make sure that it's business related. You can't have a catered dinner just because you and your family have a really nice living room and you're able to afford chefs and maids. And you're just like, we're just going to cater everything. Can't do that. Carlton, I just bought an investment property under my name. Do I need to do a quick claim deed or a warranty deed? Grantor deed. The rental property to my LLC to benefit from tax depreciation? No. You'll receive depreciation as soon as you place your rental property into rental use, is what the government calls it, rental use. The LLC is for liability protection. So if I'm the one who's renting from you, right, I might have a situation where the garage acted up and hit my head when I was walking into my garage that I'm renting out from you. And now I have a problem with that. Why didn't the landlord think to update the garage settings before I moved in here? And now I'm looking online like, dude, I'm going to write a letter, figure out with my attorney how I can get this guy, right? And you don't have an LLC. You could start to see how this becomes an issue. Okay. My partner is a realtor. I plan to be licensed as well and begin a family business. What entity should we form first? S-Corp or LLC? We will net over 40K for 2022. So if you know for 100% fact that you're going to net over 40K, you can make the S election with your LLC. So why not start a partnership LLC with you and your spouse and then do an S election when the time comes? Okay. An S election can be done all the way to return gets. Oh, this is a good one. Bambi said, if you pay 0% in taxes for several years, isn't that a red flag to the IRS? Yes, it depends on how you're getting to 0% though. So if you're getting to 0% because of rental real estate, it's actually not a red flag for the IRS. The reason why it's not a red flag for the IRS is because rental real estate is the only business that you're supposed to be at an effective loss year over year. It's the one business that the government knows that has the most amount of phantom expense. Phantom expense is expenses that you don't have to pay your money for. So if I bought a rental property for $500,000, I might have put a 20% down payment on it. I might have put $100,000 down. But when I go to do my tax returns, I'm writing off the whole property's value, even though Carlton only put $100,000 down. I'm writing off the entire building's value. That's leverage. And that amount that's extra that I'm writing off is called phantom expense, depreciation. And so the government allows for you to be at a loss year over year over year on your tax returns. Kind of like how Trump only reported $750 in income, right? So seems like he's doing fine. All right, Carlton, can you walk through an example of effective tax rate in the S-Corp? That would take a long time. First off, thank you for the page. Thank you so much. Can I use revenue money from my partner LLC for my rental real estate business? Yes. So if you have a partnership LLC, you can take a distribution from your partnership LLC and then use it to fund your real estate investing. That's completely fine. And most business owners are probably going to go down that path if they're self-employed because that's where their money comes from. Guys, this has been, what if Jeff Bezos got hit with the hobby loss rule? That's so funny, right? What if Jeff Bezos got hit with the hobby loss rule, right? Amazon pays 0% taxes. Google pays 0% taxes. Microsoft got paid 0% taxes. Ain't nothing happening to those billionaires, right? So what I would love for you guys to do is I would love for you to take the time right now to click on the link below and get signed up for the Tax Free Wealth Challenge. Our YouTube live is coming to an end, and I want to make sure that you guys have taken it upon yourself to really get the education that I provide. YouTube is a way for me to create funnels that feed business into KDA. I can educate and have fun on here. But when I do an event, I'm putting on my cape, okay? Like I'm literally flying off of the top of the building and saying, okay, I'm ready to be the superhero today, all right? And so as a superhero, it's my job to show up and make sure I'm saving lives. And if I'm trying to position myself to be your tax strategist, I need you on that challenge. I need you on that challenge because it's a 5-day event for a reason. I have so much that I'm covering. I can't do it all in one day, all in one YouTube video. I need you guys to be able to absorb my mindset, ask me questions. We're going to go back and forth. It's going to be really engaging. So take it upon yourself to sign up for the Tax Free Wealth Challenge. The VIP tickets are going to sell out. They're going to sell out by Thursday. So I would absolutely recommend going VIP. If you don't go VIP, general admission is available so you can at least absorb the content. This has been absolutely incredible. I just want to say, guys, thank you so much for hopping on with me today. I think I've answered over like 50 questions today. But before we hop off, give me some flame emojis if you would like me to do this once a week. If you're open for me coming on and just answering tax questions, just rattling with you guys, and we can call it Tax Talk Tuesday. But if you guys are open to it, hit me with some flame emojis. Let me know if that's something that you guys would like me to do. And I will bake that into my schedule to be back here on YouTube Live to be able to answer more questions. But I would need some feedback. Let me know what your thoughts are. Hit me with some flames. Okay. All right. All right. I'm already seeing some flames coming through. Well, great. Well, great. For every single person that has commented a flame emoji, I would hope that you've taken it upon yourself to join the Tax Free Wealth Challenge. I really do. And I really just want to say thank you guys for even allowing me to jump on here. I know it's 10 o'clock, 11 o'clock right now, so everybody's about to jump right back into their workflow. But hopefully this provided a little bit of extra value for you, gave you some extra insight into my life and my home office studio. All right, guys, I'll let you guys go, and I'll see you guys on the next live stream. Take care.